Hi, y'all. How we doing? This is your host, Rob Napoli. If you're a podcast junkie like me and you're looking for a new podcast to add to your feed, you might want to check out the Success Fundamentals podcast with my guys, Brian Goldstack and Chris Sykes, where they drop weekly episodes that cover all things success and growth. You can find the Success Fundamentals podcast on whatever platforms you enjoy listening to this podcast, The Bear Necessities. Hey y'all, how we doing? Shout out once again to Bear Nation for tuning in to another episode of the Bear Necessities podcast. I am your host, Rob Napoli. The Bear Necessities is a podcast where we sit down with entrepreneurs, ecosystem partners, and innovation folks to talk about what it takes and means to launch, create, and scale business across the world. We talk about the journey and the challenges of being entrepreneur-minded and how that translates into your journey, giving you the tools and knowledge to overcome challenges that you may be facing in your life's journey. The Bear Necessities is part of the Rise Up Media family, and we thank you for tuning in. Now, let's get into the show. How we doing, Bear Nation? This is your host, Rob Napoli, and I'm excited about today's episode. So today, we're going to be talking a lot about the angel investment space and the investment space in general. I have an amazing guest. He's an investor. He's an angel investor. He's a founder right now. He also works for a number of different funds. So it's an amazing kind of perspective to get with this guest because he's got kind of the venture and he's about to launch some other stuff he talks about in the episode. But I really wanted to dig in with him a little bit about how do you get in touch with an angel? What do they look for? How do they look at the market, and what's the mindset on innovation? So really excited to bring this guest. This week's guest is Jonathan Hung. He's a transformative Los Angeles-based angel investor and venture capital partner who believes in a bright future for businesses seeking to broaden their horizons into North America and Asia. One of the most active angel investors in Southern California, his mission is to drive value creation with each portfolio company. He talks about it in the episode. His superpower is helping companies go from zero in revenue to their first 100,000. In support of this mission, he serves as co-managing partner at Unicorn Venture Partners, partner at Truesdale Ventures, and senior venture partner at Expert Dojo, providing a hands-on approach to supporting companies by offering strategic expertise in operations and finance and business development and multinational business strategy, as well as entrepreneurship, networking, and leadership. In fact, he spent his early days working for large financial institutions as a financial advisor, took over a family business. He's done a lot of work both here in the U.S. and in the Asia market. So this is a great episode. Lots of great takeaways. If I have to sum up, kind of in one sentence, the experience of as you look for an investment, what to do. And it's really about creating relationship and understanding that timing is everything. And that even though it's not a no right now. And so as a founder, as an entrepreneur, you need to really find ways to create content, be found, be known, and keep nurturing those relationships. Build a relationship and see where it takes you, because it could turn out to be something that happens later in life. It could be that they know somebody that knows somebody that knows somebody, and you just never know. So build and focus on the relationship throughout your investment process. So without further ado, let's get into the show. Enjoy this episode with Jonathan Hung on Ask an Angel with Jonathan Hung. All right, Bear Nation. Excited to have Jonathan Hung on the line with me, sitting down for the pod. John has this amazing YouTube channel going with Ask an Angel. So I'm excited to have you here. John, say hello to Bear Nation for me.
Great. Thank you, Rob. Hey, everyone. I'm glad to be here.
Awesome. So, John, I really, we're talking pre-show about your Ask an Angel series on YouTube. I've been following along. You and I met through Expert Dojo. I do coaching for Expert Dojo. You do a little bit of a partner there for the investment side. We did a couple clubhouses back in the days of COVID. So
Yep.
excited to sit down here. But why don't you kind of introduce yourself quickly and your background a little bit, which I do want to get into how you got into investing, but just give us your kind of quick background so people have a little understanding of who you are.
Yeah, no, thank you, Rob. So, I've been an angel investor since 2012. That was the same year I took over my family's contract manufacturing business. So I was kind of like an entrepreneur in itself, running my family business of making clothing throughout China and selling here to, wholesalers or customers in the US. Angel investing to me has been great. I've made a career out of it now. I'm transitioned fully into it. I've done 80 plus deals, a partner or an LP in like 33 different funds, not including my own. And I'm excited because I'm starting a new fund soon and just get to meet great people like you and great founders too.
I love it. That's awesome. So you have a new fund you're getting started. When's that going to start up? Like soon or
You
this
know,
year?
Hopefully this year, yep. Can't announce things yet because you go through lawyers. Like I know, everything just got sent out to the other side. They gotta get the GP agreement in place and go from there.
It's awesome. Well, we'll definitely keep an eye on that. And yeah, you've had an interesting background, right? I know that you worked,
Hmm.
you worked at Morgan Stanley, you worked at UBS, you've done kind of the finance
Hmm.
side, then you got into
Yep.
entrepreneurship with your family's companies, then into an investing. When you were going kind of through school and kind of going through this journey of entrepreneurship, what led you to like leaving big banks and taking over the family business and like really understanding this world of entrepreneurship that then led you into like, I want to invest back into this community? What kind of was that catalyst of, I'm going to leave the big banking world and go take over the family business? Was that driven by desire, need, or obligation?
A little bit of both, right? Like I always tell people, I think you break up your life into I don't know if it's say quarters or decades, but I knew in
Yeah.
my 20s I just needed to learn. Like I didn't know what I wanted to do. I
Mm.
had to figure it out really quick. Fortunately or unfortunately, my father got ill back around 2012 because he had end stage renal failure, so he had to be on dialysis. And I've only known
Mm.
my dad as a traveler, a hustler. Came to this country with like 500 bucks to his name, and lived the American dream. Made a
Yeah.
lot of money, and you can go from nothing to something in one generation,
Mm.
right? Time period, and that's amazing. And from him, I learned a lot. Me becoming an angel investor or wanting to be an entrepreneur, it really was out of just like understanding what I was good at and what I wasn't good at. I used to
Mm.
joke around like I'm not Steve Jobs, right? But I figured like, hey, I can invest in the next Steve Jobs. And that was exciting for me. I always tell somebody now, like, it's my job to get you from zero to 100,000, in revenue.
Yeah.
Like that's what's exciting to me. Like I'm your high school counselor. I want to get you, that Series A money and you move on. Whether you succeed in college, right, or not, that's up to
Yeah.
you. But I can only get you so far. And that's the exciting part
Yeah.
because it's about building. That's the thing where you're like,
Mhm.
hey, that's the exciting part. Like, I've heard the people talk about like, oh, Zuck, right? Like Mark Zuckerberg isn't Mark, he's Zuck. And you just like know, like you can tell stories about when they were early as a founder, not knowing what they're doing. And that's what's exciting to
Yeah.
me, like going through the struggle together.
Yeah.
And it sucks. Raising money sucks.
Mhm.
Dealing with clients early, trying to convince them to, help when you're just starting out sucks. But when you find the right team, when you find the right people, the right investors early and make something happen,
Yep.
it's just an amazing feeling.
Yeah. Well, I love that. And I think you make a great point. And part of the reason that I called this the bare necessities of entrepreneurship was and this firsthand, is we've glorified this term startup cool. And it's like, oh, I want to work for a startup. And then you're like, oh, so you want to work, startup, blah, blah, blah. And like, no, I want to work for more established startup. Oh, so you mean like a growth
Right.
stage company at Series B funding that's not a startup
Hmm.
anymore because they can pay for it.
Right.
Like, but you still have the startup cool vibe, right? And so, you're one of those few people that's like, I love this shit of like the early stage startup where we don't know what's going on. We're going through challenges. We're scaling revenue and still figuring out product market fit. We're wearing
Yeah.
all the hats, and that's what I love about helping companies build as well. I mean, that's what I built Rise Up Coaching and Rise Up Media around.
Mhm.
So it's awesome to hear that from your perspective. And as you kind of went through the learning phase at the big banks, you took over the family business. Uh, when did that transition happen for you where it's like, okay, I know what I know. I'm not Steve Jobs, but I know how to run a business. I've got some capital to invest. How did you how does that process to becoming an angel? What did that look like for you? Was that an easy
Yeah.
transition, a natural transition, something that you just really wanted to do? Like that for a lot of people out there, they don't we hear the word angel and no one knows what it really means. And so I would love to kind of hear how you got into that. And then I want you to define what an angel investor is for us.
Yeah. For me, I've heard that Warren Buffett saying oh, rule one, don't lose money. And rule two is don't forget rule one, right? But it's impossible. Who doesn't lose
Yeah.
money? That's the biggest joke out there. You being an angel investor or just an investor, you can't bat 1,000. It makes no sense. No one
Yeah.
bats 1,000. And you really learn from your mistakes. When I worked at Morgan Stanley and UBS as financial advisor, I learned a lot. Not necessarily how to make money, how to invest or learn. Getting my Series 7 meant I knew how to be a great investor. No, it was just how hard money it is to make, and it's easy to spend money. Anybody could spend money, build up credit card debt, owe a bunch of money out there. But how to truly appreciate what it takes to make money, that really opened up my eyes in my 20s. And then from there, where, okay, I had that great finance background and working in these big, Fortune 500 companies, that's great. But then running my family's business was totally different. Seeing what you had to do from a day to day, your CEO, you're everything. You're the accountant. You're even legal at times, even though you don't have a legal degree. You have to go talk to your lawyers and talk about this is what I need to be done, or
Yep.
Hey, I'm doing customs clearance, right? And I have to pay duties to the U.S. government, and this is what needs to be done. And talking to your team. It's about hey, do you need to micromanage at times, or do you need to just let them do what they got to do? And you're learning from them as much as anything.
Yeah.
It's just, you can't do everything. And so when I became an angel investor, it was just I didn't know what I was doing too. It was just starting off as a financial advisor, starting off running my family's business. It just took time. And, I was really fortunate. I was able to make money on my first venture investment, in 10 months, which is really
awesome.
Crazy to think about, the timing frame. But then I realized I made a lot of mistakes too. And it was just wow. I mean, I always joke with people in my third or fourth investment opportunity, I got pitched this gaming company where you tend to buy and sell stock. And you would get a score. And I'm I used to be a financial advisor. Why would anyone play this game? It made no sense. It's and you want 20 million valuation, you're not making any revenue. What? And not even then, who knew about growth, right? And blitz scaling and all that kind of stuff. But I just thought this wasn't going to be fun. And then and I thought why do they call it Robinhood? And I was just I turned down Robinhood at 20 million, and it was whoops. That's okay. Hey, I mean, even if it's now it's let's say where it's trading at 7-8 billion, right? 20 million to 8 billion, you still want to make great money in that time. But that's what I learned in the beginning process. Listen, my intuition and my gut and how I feel as an investor only goes so far. I got to go talk to more people. It's when you're doing diligence, whatever that is, as an angel investor or as a growth VC or as you're Warren Buffett trying to find the next great public company to put in, a lion's share of money into, you need a team. You need a great team.
Yeah.
So being an angel investor to me isn't just, it's your one person and you're out there talking to founders and you're making that decision. If I'm good at this, okay, that's great. I'm good at this, but I'm not good at that. And if I need understanding of healthcare, if I need understanding of better fintech, or right now, Web3 is a hot topic, a hot buzzword. What does that mean? Everything could be Web3. It's not just collecting NFTs or doing crypto. It's that relationship, I think, with the brand and the customer, and how do you use the next generation of tech to, take advantage of that. We'll figure it out and we'll see. And we're not going to get it right. If it's funny because it's really getting that trust with your limited partners, people because it was easy for me in the beginning because being an angel investor, you're only beholden or responsible to yourself. and it's your money.
Yeah.
Taking someone's money from a fiduciary standpoint, totally different. That's what it was being a financial advisor. And part of
Yeah.
like how I got out of that was just like, wow, you just see like you're meshing with everyone's egos. And like, I always thought that was so interesting. Being a financial advisor was like, how is this person a financial advisor? How is this person an FA? Who in their right mind would give this man or woman money? Because their personalities made no sense to me, right? But I realized something along the way is like, just like investing in startups and founders, like you find a way to mesh with the right personalities. I remember getting interviewed for every like big name company out there because, I was lucky. I took degrees from like USC, London School of Economics, MIT, and then finally I went to Wharton to do my MBA. And I had the opportunities to get the interviews from Goldman Sachs or Google or McKinsey or whatever. And I realized at the end, it wasn't like how smart you were doing the job. It was really like the interview is about the personality and the fat and the match you get with working someone. Because like this is going to be your work life, not your personal life, your work life. And you might spend more time with the people you work with than your family during the week.
Yeah.
It's like when you're at home, you're like sleeping, as much as you are like interacting with your significant others, your kids, etc. And for me, it was just like, wow, I didn't get that when I was younger. I was like thinking like, oh wait, I got the pedigree. I know how to do this. I have the intellect, but it's not just that. It's really this like form of like EQ that people don't really talk about and realize. And like now, like my role as an investor, whether I start a fund or not, is really understanding that emotional intelligence when you work with founders and when you work with LPs, because everyone's motivated by different things. That's what I learned being a financial advisor. I had a great boss once tell me, hey, it's not money to your client. They don't just like open up their, brokerage account, look online and be like, oh, X amount. That's what they see. They don't see a dollar amount. They see, oh, this is what I'm going to retire on. This is money for my kids' college fund. This is me buying a second home or like, being able to travel the world or me doing charitable activities. Like that's what they see the money for. Like I used to tell people, I'm your CFO, your personal CFO. You're the CEO of your life. And how are we going to find ways to fund what you want to do?
Yeah. Interesting. So there's a lot of lessons you learned being a financial advisor into investing as an angel and investing in general. And because you said that personality and that relationship. And so this always gets asked to me, I coach a lot of entrepreneurs. I do a lot of training. I speak, tons of entrepreneurs and companies and startups. And, a lot of them I know are going through the investment process. And, there's like angel investing, there's kind of VC investing, there's, private offices, and it's confusing, and it can be confusing because, depending on if it's more of a VC backed, how fast they want their return versus like an angel or a private office, you might have a little bit more time. Kind of, you're part of some venture groups. You're also an angel investor. You have your own thing that you're kind of starting. Talk to me a little bit about how does an entrepreneur who's looking to get investment, how do they have to look at the landscape of different types of investors? I want to flip it on you. How do entrepreneurs look at the landscape out to start thinking about where do they go for investment, who they should be talking to?
Yeah, absolutely. It really just depends on what stage you're looking for. Like we as investors, be honest, we don't know everything. So we run to safety, we run to like, really looking at people talk about repetition or pattern recognition. And that's true. Like raising money from a venture capital seed fund is totally different than raising money from like a growth equity fund versus an angel investor. Like when you look at an angel investor, I might just be investing on you as the person. You might have absolutely nothing ready to show. Like, and really the check sizes are a little different because like, you don't need to raise as much in the beginning because you need time to prove it out. I mean, I've talked to founders in my portfolio who've exited, and the number one thing they tell me, the most favorite thing they did after they, sold their company or IPO'd or whatever, wasn't the fact that it was just like, hey, I'm rich, I made money. It was just like the relief of not needing to fundraise anymore. Like fundraising is like something where it takes you away from growing the business. And every entrepreneur and founder will tell you they hate it I don't think there's anybody who would say like they love doing it because, it takes you away from really what you're truly passionate about. I joke like, everybody has some sort of grudge, that they're trying to
Mhm.
prove and show like, I have a grudge that's why I'm leaving my cushy job, at a,
Yeah.
established company, to start something doing my own. So like I have to find somebody when I'm fundraising to believe in that grudge, to believe in that hypothesis or whatever. So as an angel investor, I made investments where it was just a pitch. It was truly just a pitch. There wasn't, an MVP, a minimal viable product, whatever. Product market fit was nowhere close. Revenue was
Yeah.
nowhere close. But it's just like,
Mhm.
hey, I remember I had this pitch too. It was like, hey, we're trying to create a robot that makes hamburgers. That was it. That was the pitch. And it was really just like we are PhD roboticists at Caltech. And, I took a flyer, because as an angel investor, like that's what you got to do. You have to know, as I said before, you're not going to bat 1,000. Sometimes
Yeah.
like you're going to have that one that pays for everything, that one investment that
Yeah.
pays for everything. And that's great. But obviously you have so much more risk. So like, you're not going to put like back up the truck, and put in like multiple
Yeah.
millions of dollars that early. You rather like,
Yeah.
spread it around, find great opportunities and see what you can help with because money
Yeah.
is amazing, to get and build a company. You need to hire employees, you need to pay the rent, whatever your expenses are. But it really is about having really good, not just money, but partners in the beginning
Yeah.
to help you figure out what you need to do to get to that next stage of fundraising. I always tell people, listen, what decisions you need to make, and make sure that you get the numbers you need to show to get the next round of funding. And getting money from a VC is totally different because they have to justify it. Like
Yeah.
I've seen things where like I've argued with partners, and okay, well, if you don't believe it yet, I'm just going to do it personally, because
Yeah.
it's a higher bar to like,
Yeah.
jump over and hit when you have other people's money, OPM, right? And you only have a certain number of bets. As an angel, you know what you can and cannot lose. And it's a certain amount of money and it recycles or it grows or, decreases every year. And this is what you're comfortable
Yeah.
with. And I tell like certain times my people who want me as an angel investor, it's like, listen, this is what I can do right now. But it's not just money. It's like, I'll give you the time. Like, I don't want a
Yeah.
board seat or anything. Like some people ask for crazy things. Like, and that's the thing. I had a great friend who taught me this one time. Hey, if you don't ask, it's always no. So it's just
Yeah.
like sales. Everyone starts off at no. You have to find a way
Yeah.
to get someone to get to the yes. I mean, that's really
Yeah.
important. You see so many books about this, motivational speakers, everything to get to that yes.
Yeah. Yeah. I mean, that's the thing, right? And you kind of made a couple of really key points for those out there listening that I want to highlight is, we went through this weird stage, kind of in that 2021, 2022, where you could literally go
Hmm.
out for a fundraising round and close within 3 months, which is really kind of unheard of. I always learned, back when I was going through, when I got my master's and came out and kind of worked my first startup and helped them scale and came to the US and started pitching, it's like, it's kind of like bringing a baby to term. It's about 9 months to develop the
Yeah.
relationship. You're dating, you're whining and dining, you're doing due diligence. Like, every startup values their company at this number, and then you do your due diligence and validate this number, and then you have conversations. So it takes a while. But then we saw this like fast action, like moving quickly when rates were low and money was flowing, and now we're kind of back
Hmm.
to, I'd say, a little bit more of a holding pattern. We see all the headlines about this, but you know,
Hmm.
I think it's key to understand that this is going to take time, because when you're looking for
Yeah.
investment, whether you're an angel in the early stage, whether you're talking to the VC and you're trying to get a seed, or you get to the stage where you actually go Series A, which is going to take longer and beyond.
Yeah.
It's more about finding, and I pitch this all the time. I am against getting investment unless you need it, because you're giving
Right.
up equity, you're giving up minus angel. I think the angel piece is what I love a little bit, is that tends to be that angels, it's a little bit more freedom and it's a little bit more one to one. Like, you're going to help them build and a lot less ask versus like bigger rounds later.
Hmm.
And so it's like taking that step back to develop those relationships and find somebody that believes in you. Because if they believe in you and invest in you, that's a win-win. Versus I've seen so many founders take on bad money. from
Oh
taking
yeah.
money because they feel like they need it. And it's the worst
Mhm.
experience. They're always in board meetings. They're always talking to their investors. They're always begging for more or having to justify decisions. And it's a tough thing. So how, and you talked about your philosophy of like, you invest on people, and you actually said to me that you really believe angel investing is much more of an art than a science because you're in these earlier stages. So from your perspective, what are some of the key things outside of like the relationship when you're looking at different types of startups or companies? What are the things that you kind of look into that are like your checklist of things without giving everything away? Like, what are some of the things that you
Mhm.
really kind of tend to look at as you're looking at startups that you want to potentially have the conversation to invest in?
I think people get blown away by like, oh, like the idea at times. But, then I realized after investing, it's like, wow, this is like the 20th time I heard somebody figuring out how to do real estate tech, how to like pay your rent faster. And I'm just like, really? Like, I wonder how many of these companies can do it. Like, so the first time you hear an idea, wow, it's amazing, right? Like, wow, can you actually do it? But then you realize, like, wow, it's more about like, not can you do it, but can you get people to believe in you? Not just me as an investor, but a team to strive towards that. So
Mhm.
when I look at somebody, building a company early as an angel investor, it's really my focus is on the team. And that's cliche to talk about that, but it's really true. We could talk about revenue growth and customer growth and talk about what certain IPs you have, but really it's just like, are you somebody who can get people to take that journey with you? Because like we get like blown away by the stock options and like you're going to be a multimillionaire if you come join my company, but like that's so far, like in the
Yeah.
very beginning, like people think it's like, oh, we're going to do this, and like I give credit, like I have a partner now, Mike Jacobs, who we're starting a company, and we started last August, and I give him credit because like he's built a team where like, listen, I'm a co-founder with him. I'm a COO on this project, and it's great be on the other side of the table, like running and doing a startup versus like investing in one.
Yeah.
Totally different experience. And now it makes me a better investor because I can call BS. It's like, no, that's not true. Like,
Yeah.
this is what I do when I talk to other investors, and this is what they require. Like, how do you think? Like, how do you justify asking for 5 million when your MRR just got to like 17, 18,000? In this, not even
Yeah.
just in this environment, but just in general. And it's just like people have this belief, like I need, and it's just like maybe you don't need 5 million, for your seed round. Like why not take less? Like you said, take less, give away less, and figure it out. Because in the beginning, I tell people like, listen, I'm investing as a safe holder most of the time. Everybody's like,
Yeah.
ooh, the YC safe, it's not even actual equity. No one's giving you or a convertible note. Like it's like not even debt at times when it's a safe because like it's nothing. It's like for future equity.
Yeah.
That's what the F and the E stand for. So like I can't tell you what to do. It's more like I want to
Yeah.
see how you respond to me. And it really like I'm not going to give you more money if I don't feel like the next round, like maybe you've done great traction, this or that, but like I don't like the experience, and it's like it works both ways, Rob. It's like, hey, yeah, I agree. Some bad money is bad money because like they're on your case the whole time, but it's the one where the founders like don't even give you an update and they like expect like to you to bail them out at the last minute.
Yeah.
Like I tell people this, like if I ever have an autobiography, it's going to be called "In Case of Emergency." It's in the sense of like it's my personal life goal to be someone's emergency
Yeah.
contact, but also find somebody to be my emergency contact, right? Because it's like in the VC game, that's what I am to you. It's like it's not just the good times that you call; it's when there's bad times as
Mhm.
well, And it's
Yeah.
it's both. It's a balance. It's not only calling me when there's good news. My dad used to bust my balls all the time when I took over the family business when we were working together 3 years before he passed. And he was like, why do you only effing call me with bad news? And I'm like, because I can't do that. When it's good stuff, like, hey, I only call you when I need your help, like, because you've been through it. Your experience matters,
Yeah.
right? Not just like, oh, I hid everything from you and like I made a decision without your knowledge. It's like, what would you do in
Yeah.
this sense? I mean, really, that's the key to finding a really good entrepreneur is he or she's willing to give you more information and really like, listen, you only have so many minutes and hours in a day and seconds, right? So it's like, how do you use that to your advantage? Like it's a process too, trying to work with like your good managers and your good entrepreneurs versus your bad ones. And really, for
Yeah.
me, when I go through this process as an angel, it's really seeing like that relationship. It goes back to what I was saying about like a job interview, right? Like I'm trying to see if I can hang out with this person, more. Like,
Yeah.
do I want to put my time into it? Putting money is easy.
Yeah.
Throwing money is so easy at something, but really like spending time and like going for the hours. Like, I would have people like say like, doing board work is a lot of work. It's not just like, oh, let's like,
Yeah.
what are we going to order for lunch today? Talk about now or how the meeting, how our actual numbers are hitting our estimates. It's a little bit more than that. It's a nuance. It's
Yeah.
like, how can I find you more money? How can I find you, the
Yeah.
right salesperson or the marketing person to achieve your numbers so we get that next round of financing for you?
Yeah.
It's so like, it's all like the BS that you hate, but it is as an entrepreneur,
Mhm.
whether you're running a startup or, you're making really great cash cow business as a contract manufacturing business. And it's knowing when to pivot. Like that's the key.
Yeah.
Like when I talked about that Robinhood investment, like I should have understood the pivot, and
Yeah.
how you're not going to be doing the same thing you're doing from, yesterday till even a month from now or like a year from now.
Yeah.
You have to keep innovating.
Yeah. And that's really interesting too. Like I think, for a lot of people out there, they see these paths to investment, and I think everyone defaults going to kind of your traditional investors that you can go find a portfolio and be like, okay, they've gone through this, this, and this is my space. If they put money in that, they should put money in me. Finding an angel, I feel like, is a little bit harder. In the fact that there's a lot of people that say they're angel investors because they've invested once or twice, but they're not active angels, and that's a little bit harder to look at. So I love this idea of relationship, and so that just for those out there listening. So Jonathan is a senior venture partner at Expert Dojo, which is a accelerator that invests in their companies. And it's a great early stage startup accelerator that I coach at. He's managing partner at Unicorn Venture Partners. You're a partner at Truesdale Ventures. So quite a few different companies. Where do you find the time, or how do startups approach you to build these relationships? Obviously, you have like the accelerator circuit and things that you're involved in to meet. But say, a couple of companies that I know that are listening to this podcast, like, oh, how do I reach out to a Jonathan? And what is the way they can reach out to you to start the conversation? And what's going to get you to respond? Because you probably get flooded across those different companies, I said, with hundreds, if not thousands of pitches a day. So how can somebody build a relationship with you to stand out because they think that you might be a good fit for their business and vice versa, and they don't maybe know you? How would they reach out to you to make them stand out where you'd be like, you know what, I may want to respond to Rob and his company because of X, Y, and Z? What does that look like from a cold outreach perspective from the entrepreneur side to you? What are the things that would make you say, hey, I'll take a call, or hey, team, go start like looking into this, because you talk about your team. Let's go look into this company.
Yeah. And I learned this along the way too, and it really makes sense. It's like there are cold emails and code intros, right? And you could like shoot your shot because it's like, hey, like I said, it's always no until you try, right? To get to that yes, right? Like if you don't try, it's always no. So for me, this is the best way. And I think this is true as me as the founder too, as I'm looking to get, capital. You find warm introductions however you can. You go on my LinkedIn and like you see like who you connected to that maybe knows me, or even better, go on my portfolio pages, right? Like if I have my Crunchbase that I'm updating, or if you're looking at my website, like, hey, why did you invest in this company? Or like let me get a way to talk to this and this founder that can make the intro to, the investor. And that really is better, a warm introduction, because like, listen, I've already invested with this person. He or she has convinced me to give them money, and like, for better, for worse, like, this is the person or company that I'm already on board with. And so trying to find that way to get to me is not sending me like a random LinkedIn message. It's really about like getting someone to intro to you, and I'll take it a little bit more serious because like, wow, I already trusted this person's judgment. Now, like, okay, if you actually think you're willing to go out of your way, because it's annoying. It's annoying to like, type down like this, give me a background, this or that. Like it takes time, it takes effort. And if you can't get somebody to do that for you, how are you going to get them to raise money for you? Like, if you can't, like, get somebody to be introduced to me, like, you're not going to be good at raising money. And part of your job as an entrepreneur is raising money and getting out of your comfort zone. You might be a great CTO. You might be a great technical founder. You might be great at, like, your certain industry or field, but that doesn't mean you're right to be an entrepreneur.
Yeah. I love that answer. And I think my introductions are always great. And I have a little bit of a contrarian opinion, but this is the sales guy in me. And when I was raising for a company and it actually it worked. So I believe in this. And there's a way to do cold outreach that will actually makes it feel warm without waiting for somebody else to make the intro, and let that come around later. And it's very simple. You don't want to read 5 pages, right? It's sitting you, hey, Jonathan, I've seen you invest in these companies. In fact, I know the founders here and here. Here's key milestones about my business. I have a deck. I would love to get your feedback. I think it may be of interest to you. In the meantime, I'm doing this to connect in other ways. Or like I might do is like, I might spend a week commenting on your YouTube videos and asking questions and engaging with content. So you already see my face and my name, and I'm already on your radar. Then send you that email, then tie those loops together. Do you feel that could work as well? And this is what I teach people, and it's worked really well, especially, and I'm leading this to the next question, especially in the New York ecosystem. Do you find that work well for you? And then I want to get into the conversation of the ecosystems where you're at over in Silicon Valley and kind of like New York, Austin, Miami, these ecosystems popping up, and how you kind of judge, geographic locations. But the first question, do you feel like that kind of cold outreach, if they're tying the loops together, they're taking time to engage with your content and be very thoughtful of connecting with you for a specific purpose of like where that connection point could be, not just a person, that may work for you and get you excited about their ability to tie loops together in your ecosystems?
Yeah. Awesome. I also feel it's part of like, we as investors or just as like money managers, whatever, we're not objective, and it's just like, that's a really like being subjective, being objective. We're not a judge. I'm not supposed to, but even then, like you're basically like catering to your audience, right? And so it's like, if you're going to send me a biotech deal or like a music deal, and you look at my background and it's like, I don't invest in that stuff. So why would I go out of my way to really understand? You have to like, I tell people that too. And it's like, listen, it is also like a numbers game, and you have to go reach out and like tell your story, and you'll have people who want to take that investment. But when you're really early, like I've done it recently in last year. And it's just like, I have a great company I invested in before Dropbox acquired it called DocSend. And I put, not just a shameless plug, but it's like, hey, I've already got my money, but like I use DocSend all the time. And I'll be like, wow, they said no by looking at the deck for 11 seconds. That might not be fair. Maybe maybe they're quick, but I'm like, how could have they made a decision on me in 11 seconds? And really, it's like, it wasn't enough to get my attention, right? It's just like, oh, that's why I said the warm intro works a little bit better, because there's so many minutes in a day, as I said, and then like really seconds now. And like people just say no or don't take the time. And I've seen the stats. I just seen it, because it doesn't appeal to them. It really doesn't. But then the funniest thing I saw, like I was able to raise money from somebody because another founder that they invested in walked me in the door. You see that all the time. And listen, that's how sales is. Whether you're trying to sell your next consumer product drink, or you have like a B2B SaaS product, like, and you have to go get to the VP of this or the CTO of that. That's how you get walked in through the door. Like, listen, it's like, and it also works where it's like, hey, I got to do a convention. I got to hit up a convention and see who I'm going to meet and start the next conversation. And that's great too. So it's like, if I'm going to a pitch event, if I get invited, like, listen, I'm not stupid enough to think I'm not going to get pitched. I'm going to the Lion's Den. I got business cards. Like, like, I'll be like, it's stupid. You got to find yourself in the right situation. Like, you want to be pitched and find yourself like that's the key. And like the moment I'm tired of going out there and meeting founders and people to talk about, then I'm going to retire, because great deals don't come to you. Like, as much as people are trying to reach me, I'm trying to reach the next great founder too, because he or she has ego as well, right? And it's like, and it's all about the timing. Like it's
Yeah.
all about great timing when you find something. Like recently, like yesterday, like after our, we're doing our podcast now together, but like I got two big calls later today, and it's just literally one happened yesterday, and it's just the timing of it all to find it.
Yeah.
That's what I find interesting too. It's like you have to keep at it. It's like I motivate my Mike too as
Yeah.
my CEO. It's like, listen, I know you have a new baby. I know you have your duties as a dad, but like we got to go do this now. We have to set
Yeah.
aside time for our team to do this because it's really putting in the work. It's not about just like,
Yeah.
oh, I just resting on your laurels and like I have this background. Like I could care less.
Yeah.
It's like even raising money for as a fun. That's your being an entrepreneur too, and I have to find something to get people's attention. Because like
Yeah.
you can't just be like, oh yeah, I made you money. So what?
Yeah.
That's like I said
Yeah.
before.
100%.
Money is not just a dollar amount to people. It's not just a number. It's what motivates them. Like,
Yeah.
and I've seen people
I think
with
that's
money, without money, how they do it. Yeah.
I think that's really interesting too. And like part of the reason why I love like utilizing, I wrote a book on building a personal brand and how to leverage like there's a way that I can look at and you do this because you put a lot of content out. I can look at your portfolio. I can look at your content. I can go and listen to your podcast and I can
Mm-hmm.
probably find 5 things that I could tie together that are my ecosystem and your ecosystem. And that could be a warm intro right there. And like, that's how people forget that, yes, you always want somebody introducing, walking the door, but like, because when you do it right and you can show your motivations and you find their passions, motivations online and you see what they're engaging with and the way that you're going to all these events, like, okay, I know Jonathan's at that event and this event. I can leverage that into creating a little bit of, I was talking to somebody about this the other day, serendipity, right? And,
Mm-hmm.
a little bit of luck where opportunity and preparation meets because like, hey, I know there's 15 events happening. If I go to all 15, there's a likelihood Jonathan talks about going to events all the time. There's a likelihood that he's going to go to one of those 15 and I'm going to run into him. And that could be the timing that I need to capture his attention in a way that might never happen. So I love that you share that. And that's such an important piece. I want to shift gears because there's obviously big conversations happening right now. There's, Silicon Valley, Silicon Alley, Silicon Prairie. We saw with the pandemic, a lot of companies moved out of California to Austin or from New York to Miami. How has the landscape of the startup ecosystem changed? You're still sitting on in Silicon Valley. How do you view the different ecosystems and like leverage that to look at potential deal flow? I know that events is hard to do, like go to events in New York unless you make a trip out here or go to Miami for that scene. But how do you see this kind of changing of ecosystems affecting in a good or bad way the whole investment cycle for an investor and for startups as they're all moving around now?
I think, with 2020, the issues that happened with you have to be a really nimble and mobile investor. It's funny. It's like I made investments in 2020 and 2021 where I still haven't met the person, like in person.
Yeah.
Like I've only met them through this, like, a Zoom, not a podcast, of course, but like I got pitched on Clubhouse, once, and like we made an investment through that. And it's just finding ways because it's not about like I have to be in Silicon Valley. Like I'm in LA. Like I used to go to Silicon Valley every other weekend, every other week, whether for the time I was going to business school at Wharton. But at the same time, it's just like, it's not necessarily about being in a certain location, but I do love the travel. Like, and I'm glad I could pick up the travel. Like I just went to Singapore, I'm going to be back in Singapore later this year. And it's like that ecosystem of like, oh, well, I'm looking at Web3 and like, really like to engage in that space, you have to go and talk to people and meet people and like get motivated that way. Cause you're not going to do it like just like reading an article or like how do you get in front of people? It's like, wow, listening to other speakers talk about what they feel, what their views are, and figuring out what you think of it. Because it's getting as much information as possible to make an informed decision. Really, that's what it is. And sometimes, listen, like, back in the day in Silicon Valley, like people wouldn't leave their little box there, right? Like, and you have to, like, whether you took money from it, you have to come move here. And obviously that's not the case anymore. There's like obviously great benefits of finding great founders in like, going to Texas or Florida,
Mhm.
like you mentioned, or even LA instead of like San Francisco and the Bay Area and
Mhm.
Silicon Valley. But really, it's about developing that relationship and like not needing to be in person anymore. Like maybe initially you have to get that, and that's great, the first, first touch point, but it's the cadence. It's like,
Yeah.
how can I get you on a regular call or a monthly call, and talk about this and do that? Like I see that. And it's like, look, as an investor, that's one way. And now as a founder, I see it too. So it's like, okay, now we got to raise the next round of capital. And
Yeah.
like, people who said no, that was great. I learned why they said no, which is totally great. And now it's like, okay, now I got the numbers now. Is it still a
Yeah.
no? And you go back. You
Yeah.
have to keep getting the touch points. It's like, I tell people, like, I don't say no when to your I just say, like, I pass on the timing of your investment because, like, I need
Yeah.
more of these data metrics. I need, like, certain things aren't going well right now for me as a fund manager, that I can't make a decision right now, and I'm going to have to pass at this time. Like, there's so many factors
Mhm.
that happen, and it's just like business. Business, I
Yeah.
mean, stuff happens, right? Every day, and you have
Yeah.
to find people at the right time as well. Not
Yeah.
timing is everything too when it comes to investing.
Timing is everything. And I think, the beautiful thing about it is, with everything that happened during the pandemic and all that, for a lot of startup, especially like in like the heartland in the Midwest, where you don't necessarily. I'm from Kansas City and lived in Des Moines, and
Mhm.
there's Chicago and Minneapolis. There's some really nice little ecosystems, and you don't like see those as much, right? Where startups coming out of these different parts of the country, but now you can, and because of the like that the fact that you can develop a strong relationship without ever meeting in person, although it's better, it opened
Yeah.
up more opportunity for more startups to connect with more funds and investors to start the conversation and create timing that could potentially work. And the thing that I see all the time that
Hmm.
entrepreneurs fail to do is you have to run your investor outreach like a sales funnel, meaning you have to nurture
Yeah.
it. If they pass on you
Yeah.
right now, send them updates, stay in touch, ask them, how do I give you what you need, or what's a good check-in cadence so that I can share my milestones with you and see if timing may work later. And they
Yeah.
hear the no, and they move on to the next one. It's like, no, 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 take that time, especially if somebody's giving you two-way feedback. If you get luckily like an investor giving you two-way feedback and saying that, hey,
Yeah.
Jonathan, when can I follow up with you? What do you want me to send you, and what would that cadence look like? So that maybe we can revisit this conversation in 6 months. Maybe timing's better, our metrics are better, right? And so many founders fail to do that, and you're seeing that on the other side from both.
Mhm.
Now that you're on both sides, it's kind of interesting,
Mhm.
but
Mhm.
I think that's so important. Um, I love it, Jonathan. I know we're getting towards the end of time. I have just a couple quick questions.
Yeah.
One, what advice would you give to somebody that wants to be an entrepreneur, a Gen Z or a millennial, anybody who wants to be an entrepreneur? What is the advice you give to an entrepreneur right now? What would you say to them?
Ah, really make sure this is what you want to do. That's so like really cliche, but it's just like it's not something you could do part time. This isn't something like, oh, you could be half pregnant. It's like you're willing to take on this challenge. And it's not going to be
Yeah.
easy. It's not going to be glamorous. There's no such thing as an overnight success. It might feel like that at times, but I've talked to entrepreneurs and they did have everything they had to do to make it happen. And you're
Mhm.
not going to feel like successful maybe until you exit or until you have a positive outcome. But be measured, right? Some people focus on like, oh, I got to make a certain salary, or like I'm like focused on more, and I'm not like getting like what I
Mhm.
want out of life. And yeah, I get that life is not fair, but to be an
Mhm.
entrepreneur, that coming in, it's like
Yeah.
you can accept all the no's. You can get 1,999 no's, and you just get that one yes. And that one yes
Yeah.
changes everything to get you to the next round, to the next round, to the next
Yeah.
milestone. That's what it is. Because it's not about like, you know, seeing the end. It's about step by step by step. And you have to
Mhm.
be able to know that it's not, a straight line. There's going to be like ups
Yeah.
and downs and like, oh, you went back to zero again. And it's horrible. And it's like, and sometimes you have to know when to quit. right? You have to know, like, hey, this wasn't the time. Like, we have to, reassess again. But it's like, are you willing to do that grind? Like,
Yeah.
just like I said, like, I'm at a certain age now. Like, I'm turning 40 later this year, right? And I woun't like take a job just to get experience anymore. I
Yeah.
did that in my 20s and early 30s, but not
Yeah.
anymore. I'm not going to do that anymore because, like, I know how hard it is. So you have to have that drive and passion to do it. I mean, some people are great entrepreneurs and they love going back to zero and getting to one again. That's great, but it's not everyone is. And you have to, like, really understand circumstances, like your personal versus your work, that work-life balance, it does matter.
Mm-hmm.
It really does
Yeah.
matter. You have to have a right support system, not only for your team, but in your day-to-day.
Yeah. I know that work-life balance is very a hot topic and everyone talks about it. And I fully believe in everyone should find their own work-life balance, but that's not always going to be even, especially if you want to be an entrepreneur, right? A lot of that early days, it's a lot of time, energy, and effort. And we talk about the bare necessities of entrepreneurship, and people know that this shit is fucking hard, right? And so
Mm-hmm.
you need to be able to know what you're stepping into and put yourself in. So I love that advice. Um, for founders out there looking for resource, if you were telling them, hey, here's a book or a podcast or somewhere to go look at, what would you recommend founders go look for good resources to level up, whether it's them personally, their startup, etc.?
I think it just depends on what they're looking for, right? Like, I think if it's an industry thing and they're trying to understand their industry, yeah, you follow certain trade presses, right? Like, I'm in food tech right now, right? I look at so many like food tech blogs, food tech like related things. Like, where should I go to like make
Mm-hmm.
a splash? Is there a convention I need to attend? Like, we have a food tech company called Kitchen Data Systems, and like, I didn't know there was an International Pizza Expo. And I went to that in
Mm-hmm.
Vegas, and it was like the 30th something year of it. It's like, wow, this is a whole new world that I didn't know about. Like, when I was running a clothing company, it was called Magic, right? The
Yeah.
Men's Apparel Guild in California, and like, that's twice a year in Vegas, and it's not there. You're going to do a lot of sales, but that's where you're going to meet a lot of people to get your next meeting and
Yeah.
get that ability to, have a conversation for sales. So I think that's really important for like your industry specific, like finding other great people and asking them how they did it or what they're
Mm-hmm.
looking at or what the trends are. When it comes to investing, like, I really take a look at, like, I love reading actions. I get so many newsletters, in my blogs,
Mm-hmm.
in my email box every day. And I just like, oh, okay. Sometimes it's like also seeing like, oh, what's in the news, like, that I know of. It's like,
Yeah.
wait, oh, my company raised money? I didn't even know that. Or like, hey, that person. It's like, I'm always going to see something that's like, oh, that's interesting. Like, hey, I'm an investor at .la. This is an
Yeah.
article, a website here in LA where, like, it's important to me because this is the LA ecosystem. Like, I'm close to
Yeah.
here because I'm physically located here and I get it every day. And it makes sense. Like, oh, interesting, this and that. And it drives me like, wait, let me go talk to that person, because as
Yeah.
an investor, like, it's not like the round's ever closed. Everyone's raising
Mm-hmm.
money. And how can I be helpful? Which is important. Like, it's constantly reading all this information too. And that's just me. That's how I do it as an investor and as
Yeah.
a founder, because those are things that are important. Like, and we share articles on Slack through that, or,
Yeah.
I see an article that I think, hey, my other partners need to look at and think about.
Yeah. I love that. And, I, I can't stress this enough. And I coach this shit all the time. And it doesn't always,
Mm-hmm.
it doesn't always hit. The founders need to put out content. Put out content,
Yeah.
be out there, be talking, try to get in publications, get on podcasts. The more content you have out there that could be found by others leads you to the next conversation, that could lead you to that investment. And it's why it's so important to put out there.
Yep.
Austin, the last question I have for you
Yeah.
is, what are you excited about is trends happening in the ecosystem right now? Like, what are you kind of watching and excited about as we head into the back half here of 2022 and into 2023? Is there specific industries to watch that you're looking at, or types of companies, or trends? What's got you really excited?
For me, like, I saw an interesting quote the other day. I mean, it may have been the president of Apollo, and it's like, if you're under the age of 34 it's like, we're not really sure how good of an investor you are. We're going to find out, because that meant like you probably graduated college when you were 22. That was 12 years ago. You do the math. That was 2010. And it's like, yeah, I mean, I survived the Great Recession. I was working as a financial advisor when the market crashed.
Yeah.
And like mortgage-backed securities almost blew up the U.S. economy. And
Mm-hmm.
it's in these times of true like grit that you will be tested. And this is the times when you're gonna like, are you gonna just hide, or are you gonna keep going out there and finding the best companies? Because like whether you have an amazing bull run or it's a bear situation and like capital's tight, you're gonna find amazing founders and great companies being built right now. Because look, all these companies are cutting jobs. Like some of I just read today on LinkedIn, like, wow, a great company that I'm in, Dutchie, for example, they just laid off like 7% of their workforce. And listen, it's not that they, probably they had to cut burn to extend their runway, and even Coinbase, who I invested in, they had to cut, rescind their job offers, this and that. But these are the ones who are making the right decisions as a business to see how they're going to survive year by year, because the Fortune 500, the S&P 500, all that, they change every year. It's not like every day it's the same. Like markets valuations go up and down. And this is a time where you're going to find that company that's going to really truly succeed because of the founders who are involved. I mean, listen, it's great to have step ups. It's great to, exit this and that. But part of my job is to look for the next amazing thing. I'm not like here to say like, yeah, let's buy some Apple. It's on the dip. Like, hey, that is a great advice as a financial advisor. Like, why wouldn't you go fight the safe? Yeah. For me, it's like, okay, well, I saw this other great Twitter quote the other day. It's like, if you have a fresh $50 million and a backbone, like that's it. That's what you want. Like you have to have convictions in what you're investing in right now because you have to help them. It's not just good times, it's bad times. That's why I'm your emergency contact.
Yeah, I love that. I love that emergency contact line. And yeah, I'm really excited too. I think that, as a millennial who graduated in 2010, who worked in the mortgage industry on the HARP refi stuff as we were coming back out of, the recession, we've gone through a lot of highs and lows, but as I really think that we've, for the most part in my adult life in the last 12 years, have been lucky with really strong, for the most part, strong markets coming out of that. And I think it's the time to see kind of what millennial and Gen Z innovation bring, right? When we think of the founders, and there's obviously going to be founders who are in second, third startups and pivoting down. So I don't want to release our older founders, but for my audience, I'm really excited about seeing how Gen Z and millennials respond as they've stepped into leadership in these startup companies and things like that. Some of the companies you mentioned, like having some younger founders and younger CEOs running big companies, it's going to be really exciting to see how they navigate the change. And that's something I think is really exciting. And I love that you're excited about that as an investor. And that tells, and that's what I strive for all these founders that I work with. Is like these are the type of investors you need, is the ones that get excited about finding great companies, that get excited about helping you go from 0 to 1, that get excited about being a part of your business success and probably hype you up more than tear you down. So, Jonathan, thank you so much for being a part of the show. Where can my listeners find you at? I'll definitely link your YouTube page. Where can they find you to learn more and follow along with your journey?
Yeah, I have a blog, me and my marketing team push out a lot of content, and I think it's great talking about like what's happening in the current events in the marketplace. It's on my website, jonathanhung.com. LinkedIn is a great tool. As I said, like, there's a lot of analytics there and you see who we're connected to. Yeah, reach out on LinkedIn as well. I mean, those are the best places. And on my website, you'll find other ways of contacting me as well.
Awesome. Well, I'll make sure to have the website, the LinkedIn, and then your YouTube page, because your Ask an Angel series, I think, is fantastic. I watch it all the time. Put on the background. I've learned a lot. So I'm excited that I got to have this time with you, Jonathan. Thank you so much for being a part of Bear Nation, my friend.
Thank you, Rob. And hey, everyone, I look forward to hopefully meeting everyone in person or like getting reach out. Hey, like I said, it's always no if you don't try.
Let's do it. I love it. Great final advice. Until next time, Bear Nation, stay well and rise up. Bear Nation, once again, thank you for tuning in and listening to the Bear Necessities podcast. If you enjoyed this episode, please subscribe, leave us a review. It really does help and means a lot to us, the show. And I want to thank our friends over at Fin. Fin is a social good platform that creates employee engagement and builds culture. It's our mission to support and give back to the communities that we serve around the world. And we do this by giving every guest on our show a $10 donation to the cause of their choosing using the Fin platform. Until next time, thank y'all, stay well, and rise up. If you hadn't already heard about it, or you don't already know, my new book, The Social Soul, How to Master Your Personal and Professional Brand with Intentionality and Authenticity, is out now. You can find it on Barnes & Noble or Amazon. Go check it out, purchase a copy, let me know what you think, leave me a review. I appreciate y'all for the support. Can't wait to hear from you what stood out the most.